All right, good morning. I promised to record a video about my strategy I'm using, and I hope it's a little bit helpful to you. If not, doesn't matter. If you have any questions after, just let me know. Yeah, let's start the video. The strategy is scalping on the 1 minute chart. I usually do it only from let's say 9:30 to 12 New York time, and from I don't trade from 12 to 2 because this is New York lunchtime, so you don't want to have trades in New York lunchtime and to be involved in the consolidation phase. So if you want to trade the strategy, trade it from 9:30 till latest get out at 12, and then from 2 to 4, or just if you have enough profit, just go away and leave it like that. Okay. Usually we trade Nasdaq, so this is why I have the Nasdaq here, but you can use the strategy on gold. You can use it on Euro USD or Dow Jones or German 40 or whatever. This was Nasdaq. Let me scroll back a little bit. This was Nasdaq yesterday. Okay, the first thing for the new day I always do is I look at the daily candle from yesterday. So this is here. Okay, or we start with this indicator because this is actually the only indicator I'm using, and this indicator shows you the previous day high and the previous day low, so you actually don't have to mark this extra here. So what you want to do is you go to indicators and type in Lux. No, just do it like this. Smart money concepts, and then you click here the smart money concept by Lux algo. So when we go back to the 1 minute, as you can see here, it shows you the previous day high, the previous day low. I already have it here on my trading view chart, so I can remove it. The colors you like or whatever you uncheck or whatnot, or what, it's your own preference. I don't like to have too much on the screen, so what I definitely need is the fair value gaps, equal high lows, the bullish and the bearish fair value gaps here. The colors you have to change. You can change if you want to. The daily is important for me. I don't need the weekly or monthly. The premium zones of discount, premium discount zones. Yeah, I have this. What I don't have is color candles, or I don't like to have the break of structures, and I don't like the change of characters, because this is where you mostly, they're really late, and this is where you most get out of a trade and in a loss. So I don't use it. Okay, so this was, this is would be a live trade now. One thing I always want to see is a bullish order block or a bearish order block. So this is the most important thing. It has to be confirmed, because you always want to wait for a consolidation phase, and then you want to get out of this consolidation phase. And it's confirmed by a bearish order block or a bullish order block, and with a strong fair value gap, which is shown bullish here. And right now we are waiting for one. So this is actually a box here, and we want to get out of this box. A bearish order block is created, so we're waiting for a bearish fair value gap, and then we want to go back to the downside. So this is what we're waiting for now. Yeah, you know how it's a 1 minute time frame, so this can be really fast. Anyway, I can scroll back to yesterday, which shows you the trades. Okay, check. My time is a little bit different because I have German time. So this here is the opening of 9:30 New York time, and there was no bearish order block. It was no bullish order block. Of course, it's already removed because we have a new day, so you cannot see the order blocks anymore. But these here was a bearish order block. This was a bearish order block. So these were all the winning trades. So again, this strategy is very safe, so that you don't have too many losses. Or let's say, I don't even know the win rate. You know, no strategy has a 100% win rate, but I would say it's like, could be 90%. I have no idea. I don't count it. Okay, so this was yesterday a bearish order block here, which was shown. So here was a fair value gap, a bearish fair value gap. So you always have to wait for the next candle to close. You go in with the next candle, which confirmed the bearish fair value gap. And then what you do is, I can remove it here, no problem. Oops, short position. You go in this trade here. What you want to do is, the stop loss is the body, not the wick, the body of the last candle, which is above the last fair value gap. So this was this candle, and then you can go for a 1 to 2. I always go for a 1 to 2. If you of course you can have better trades like this. This was almost a 1 to 4. This one, which still shows the bearish fair value gap, this was a bearish order block. This could have been a, let's say, 1 to 4. So if you see something like this, which creates a new support zone here, and you see it's going up and then it comes down, going up, comes down. So you don't want, you go out. Okay, I take a 1 to 2, but you can also take let's say a twin trade. So you open 2 positions, like 2 trades, and then the first trade you go break even. Let's say after a 1 to 5, you go break even with both trades. Then let one trade run to a 1 to 2, and the second trade you run when you see it comes to a consolidation phase, and then you go out. Or maybe if a new order block is was created, this is also possible. So you can let it run longer to a new order block, which was created here at this position. It was it was created here at this position because I went into a bullish trade here. So, but you have to watch a little bit the chart to do this. Okay, so this was that was right. This was the last trade right before 12. So as I already said, I don't trade from 12 to 2 because this is New York lunchtime. So all these consolidation here is New York lunchtime, and you don't want to trade this. You even if you have a bearish order block or a bullish order block, but you don't want to be in this consolidation phase. Okay, so this was my time. So it was New York time to 1:30. 1:30, it started again. So that was here was a bullish order block, and then there was a fair value gap, a bullish one. So you can go in again, a 1 to 2 consolidation phase. Here was the next bullish order block, bullish fair value gap, 1 to 2. So that was like 1, 2, 3. There was another one for, I think, 4 or 5 winning trades from 5. So no losses. Yeah. This is now. This is just marked it here. That was already before London opening. So that would have been a really good trade. There was a bearish order block. There was a fair value gap. I don't know why it's removed now. I have no idea. But this would have been a really, really good one here. As you can see, it was a stop loss of, what is this? It's 16, 25, 10. Not even 10 points on NASDAQ. And that would have been the profit if you would have let it run and not take it out at the 1 to 2. So I go safe because sometimes it's turning around. But it can't happen anything, you can just let it run. If you go break even after 1 to 5 or whatever, as you can see, the price never came back. So do what you like, do what you see on the market. So the next trade was created because you can see here that this is the bullish order block. This is the first bullish fair value gap, and we go in with the next candle which confirms the bullish fair value gap. Sorry. Yeah. The stop loss is again the previous here, the low, but not the wick, the body. The body is because sometimes you have like really, really long wicks and you don't want to take this. You only use the body. So that was a 30. So that was a little bit bigger stop loss. 36 to, so that was a 20 point stop loss. But again, a winning trade in the morning, 1 to 2, or let's say maybe a little, wherever you see and whenever it comes to a consolidation phase. Okay, so this is still live going on. So this is this consolidation phase. A bullish order block is created, and now you're waiting for a bullish fair value gap to the upside. Always think about that you have here bearish order blocks. Okay. But we don't know yet because I don't see a fair value gap, so I don't go in this trade. And also we have Paul speaking at 10 a.m. New York time, which will probably mess up all the charts. So probably no trading for me today. Okay, so this is actually the strategy. I think it's pretty easy, and it's very beginner friendly because you only need one indicator, which is the Lux Algo Smart Money concept, which shows you the bearish order blocks, the bullish order blocks, and the fair value gaps, the daily high, the daily low. It shows you here where you can, it says discount price where you can buy cheap. And this is the premium where you sell cheap or buy high, however you want to say it. What I also have, but this is an indicator here. I can show you here if you can see it. This is maybe some of you know it. It's the golden sniper indicator. This is that's one of my accounts here at 194,470. This is the golden sniper indicator. The golden sniper is it's built or based. It's based on Heikin-Ashi candles. I really like Heikin-Ashi candles because you can sometimes you can see it better. This is the Nasdaq chart right now. The light blue shows the beginning of the London session. Then it changes to pink, which is New York session, and then it goes to the yellow one, which is Asia. This indicator is printing you signals, what means that if you have a pink arrow and a yellow dot, so these two have to be printed, yellow dot and pink arrow, this confirms sell. I have it here on the 5-minute chart, but you can choose actually any chart. So this shows you we are going down. I only take these kind of trades when this is red, because this is bearish, and this has to be red also or yellow. So this is a strong bearish trend. So I only use the signals when everything fits together. Yellow, pink, red, red or yellow. And for a bullish signal, blue, 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 and blue. So this signal here is against the trend. So for this indicator, I wouldn't have taken it. But this is on the 5-minute chart. As you can see, now it turns into blue. Also turns into blue, but this would be too late. I also have it on Dow Jones or German 40. You can also use it on gold or whatever. So if you like to have this indicator, it usually costs $100, I think. it was $100, but I have it already a couple of years, so I can send it to the group at Discord if you would like to use it. But it has nothing to do, so don't mix your strategies. It has nothing to do with this strategy here. Okay. All right. Yeah. I hope I said everything. Sometimes what I do is I use the 200. I don't like the VWAP. I use the 200 EMA. So, for example, if you like to use VWAP and 200 EMA, there's a indicator where you can have both. So, for example, well, you can also choose any other lengths. This is the 200, this is the VWAP. So I only use sometimes the 200 EMA, but that doesn't make any sense with a strategy. Okay, all right, I think that was it. If you have any questions, let me know in the Discord channel. I hope it helps you a little bit. Bye-bye.